All right, peace, y'all. Back again, and today we're gonna go over a review of a live trade that I took today. And you know, I had the bias right, but I still need to work on my patience and my entry models. As I learn, as I become more in tune with my model, I'll be able to grab these things. But everything is coming together right now. You know, I feel like all the concepts that I've been learning, it's coming together, and I just got to stick with it. And studying the ICT 2024 mentorship, really focusing on just like one contract for the day, one contract on a setup. And there's a couple of things that I think that I have to work on, that I know that I have to work on, such as like rushing entries, chasing price moves, realizing where invalidation levels should be, realizing that price is permitted to wick in a certain area, always remembering to zoom out and keep an eye on the higher time frame, because when price is wicking, it could possibly just be wicking down into a higher time frame level. So I have to keep that in mind. And also just managing my emotions while the trade is taking place. All right, so I'm gonna pull this video back and I'm gonna go over the actual live trade that I took. This is actually live recording right here. Not live recording, but it's a playback of the actual live trade that I took. Any replay that I do from now on is going to be following a live trade that I do. I'm not going to be using market replay just to show. I'm going to show my live trade, then I'm going to go into market replay and go over my live trade, right? Because I don't want to just depend on market replay, right? Okay. And these are for me. I'm not really teaching anybody. This is for me. But I'm just opening it up to the public on my YouTube page. So possibly somebody could learn something from it, but this is really for me. This is me just reviewing my trades, getting better, going over my trades, seeing what's working for me, seeing what's not working for me. All right, let's get it. All right, so I'm gonna pull this back. All right. So this is a 4-hour chart, right? This is a 4-hour chart right here, right? We also swept the lows down here, and then you see an order block form here, and then price came up, right? This displacement up above this. So price was coming down here, and then it displaced up above this 4-hour order block, creating this order block right here. And now price is retracing back down. Now I could have levels right here, right here, right here. And then as I drop down into the lower time frame, as these levels get hit, I could be looking for trades. I'm gonna be looking for trades to go up, bullish, right? Because as you can see, if this is a 4-hour, this is a 4-hour fair value gap right here, right? So we're bullish, and you can see price wicking into here. So when price comes back down in here, I should be looking for a setup on the 1 minute to go up, targeting here, targeting here, targeting here. Right? That was my idea coming into the day. So let's play price forward. So right here is 7 a.m., 7:30, right? And the 2024 model, you start your hunt at 7 a.m., right? And the first 30 minutes, you're looking for equal lows, equal highs. So there was some equal lows right here, right? And then price came back up. Then there's a volume imbalance right here, right? This is like a suspension block, imbalance here and an imbalance here. So you draw that across, and then you see at 7:07, you see price go up, create a high right here, but no bodies form above 50% of this line right here, right? So 7:30 comes, 7:30 opens, goes high, right? Open, high, into this area right here, right? Wicks do the damage, bodies tell the story. So there's liquidity resting right at the bodies here. It sweeps it right here at 7:47, then it does a reversal and comes down and take out this equal low right here. Good. Boom. I'm not looking for that trade right there. I'm not looking for that. That's not what I'm looking at. I'm still paying attention. This, even though it swept this, when it swept that, it created equal highs right from here to here. 2024 says, right, you look at the left side of the chart, you see a high here, you see a lower high here on the right, right? This is a good sign for liquidity resting at buy side. So this is engineered liquidity right across the highs here. So at 7:30 open, we're doing the same thing that we do at 7, looking for equal highs and equal lows, right? Even from starting from 7 a.m., right? So starting from 7 a.m., we're looking for equal highs and equal lows. So you saw some equal highs right across here, and the bodies across here. It swept it right here, and then it took off and took out the 7 low, 707 low. So this is 7 a.m. to 707. Between 7 and 7:30, this is the lowest low. It takes that out. Boom. Now it takes that out, right? This green line constitutes a 4-hour level. This is probably a 4-hour breaker, a 4-hour, it's a 4-hour level, right? This is a 4-hour level. In fact, I'll show you it on the 4-hour chart, but I'm not looking for these trades right here. I want to target this liquidity, and I was anticipating that liquidity is going to be built here, right? From 7 all the way down to here. I was anticipating this, and then I was looking for a reversal. I wanted a reversal deeper down here. Why? I'm going to show you. Look at the top of this line. This is the breaker for the 4-hour breaker. It went this green line, and this green line is this green line and this green line. That's the 4-hour breaker. The 4-hour bullish order block is here. You can use this level to come down here, right here, the top of the 4-hour bullish order block. And not only that, I could take the midpoint of that too. These are levels that I could know beforehand and that I knew beforehand, but I just have to be a little bit more observant in real time. There you go. That's the midpoint of the body of this, right? But all of these levels are pivotal levels. This is what we learned from Scout Sniper. A swing trade, you could take any part of that as a level that could be sensitive for price. Okay, so that tells you why I have these green lines and why I was waiting for a retracement down in here to take a trade. Time right here, 8:38. Still respecting the body, still building liquidity across here, still building liquidity down here. Did a little sweep of that liquidity right there. I'm gonna make that a smaller line. So when that happens, it turns, right? Look at this little fair value gap right here. Fills that on this candle, then down it goes to take out this liquidity. Now this is what, down here is where I'm waiting on. This is what I was waiting on. And what I'm gonna do now is, as we reach this level right here, I'm gonna play out the actual live trade and show you what happened in this area, right? Because I'm gonna show you what I was supposed to do in this area, because now I'm in my points of interest that I was waiting on, patiently waiting on all of this liquidity being built here and built across here. I was waiting on it to come down into a discount level of a higher time frame point of interest aligned with a lower time frame chart. This is what I was waiting on, but when I got down here, I didn't manage this trade position good, right? And I'm gonna show you. So we was right down here, and we're inside of this bullish order block. Why? Because this is a down candle, and this came up, expanding beyond that. So as you can see, this candle is coming down. It's coming down right back into this order block right here. So this is that green line right here. So now I'm anticipating a turn. But I wasn't watching it on the 4 hour when this was happening. And I think I'm gonna have to be, I could have just put a limit order here and put my stop at the bottom over here somewhere. I could have did something like that. Just put 30 pips down and just let it run. But I was trying to be extra precise right here. So now I'm gonna show you what I was doing on the live account. Okay, so you see when this closed above this candle right here and this closed above this candle right here, that was a change in state of delivery. To watch. I want to see that candle close. Boom. Right where that candle closed, right there, I should have put a limit order, right? Either somewhere down here, right here, and put my stop probably 30 pips below this low. That should have been my entry right there, right? Because why? There's a SMT going on with NQ right across here and with ES right here. And there's a bigger SMT going on down here in terms of session SMT going on with NQ and ES. All right, so I should have took my trade right here. You can see there's a SMT with MNQ, and we did a market structure shift on both of them. So I should have just put a limit order right there and put my stop down at the 4 hour level. Right now, I should have had a limit order in and my stop down at the 4 hour level or down at London low, because there's a big SMT formed with London low and MNQ. So I gotta remember these things when price is live. So price ran away, left me, and when it actually ran that liquidity level that was building up all this time, I actually felt discouraged in the live trade. But I saw that move up engineered liquidity right across the buy side, and you're gonna see that right there. Liquidity was engineered on the buy side, so I was anticipating that price could retrace and pull back. But I have to manage my emotions when I'm in these trades, because you can see how I'm actually moving the chart back and forth. That's not good. And as I'm replaying and watching it now, is something that I need to work on. And retracement, I'm studying it. I'm thinking maybe possibly it could bounce off the breaker, but price actually came back down. It came back down, and I still didn't pull the trigger on the trade. So I have to believe in those 4 hour higher time frame levels and just pull the trade, pull the trigger on those trades. So you see price meandering, and I'm moving the chart all back and forth, all here. Entry, points of entries should have been made. And I'm actually gonna chase price, but it's giving me opportunity right here within these levels right here to take a trade. And I didn't clearly see the SMT between London, how it formed, because that 415, because ES London low was at 230 and MNQ's London was at 415, so that threw me off. Only after I realized. So I took my trade right there. Once it closed above that breaker, I took my trade right there. And I took it at the high too. That's another thing I gotta stop doing. Is taking trades at when the price is high. Wait for the pullback into the breaker. That's something that I have to work on. So price was just meandering around right here, and I was watching that liquidity level at the top, the big thick black line right there, and I was targeting that. And my stop loss now is at London low. And that's basically where I should have had my stop loss before. And I didn't add anything on. It was one trade, one contract. And here I'm just studying breakers, stuff like that. And this is where I should have pulled out my higher time frame chart and really been studying this level on like a 2-screen with the 4 hour on the left and the 1 minute on the right, and really watching to see what PD array, what higher time frame 4 hour PD array is the candles wicking back down into. I'm targeting that high right there. Marking out levels and just watching that high, watching how the candle plays in those fair value gaps. See right there, there's a gap right there. I didn't even see that gap in real time, but as you can see, price wick back down into 50% of that and then takes off. Still meandering around, not really closing, and I'm moving the charts back and forth, too frantic. You know, trying to study. That's why I needed that higher time frame, so I could really not be moving the charts. I could really anchor in validation levels and really see what PD arrays price is wicking back into. Yeah, the movement on the 1 minute chart is too quick, it's too volatile for my emotions, so I need a high time frame to balance that out. Targeting that high right there. And that's why I need the higher time frame, to let these retracements breathe without feeling the fear that my stop is going to get ran and pulling my stop all the way up there. You know, those are like impulsive decisions that I got to work on. And then I took my profit right there, like $37, and then price came back down. Mark out this liquidity level right here. Mark out this level right here. Mark out this level right across here. Right? So watch this, right? So 9 a.m. opens, right? Goes low. So it's coming down low within this level right here. So bring this across and study this area right here. So watch this now. As price is playing, this is what I should have been doing. All right, from right here, buy one, right? Put my sell stop at least down here. Buy, right? Plus double click on here. There's an SMT going on right here. Put my TP somewhere up here. Right? And look at price. where are these wicks coming into? They're respecting this level right here. In here, they're respecting this. No wicks is passing through here. That's what I should have been focused on. All right. Even all of these wick backs right here, you study this level right here. Right? Even here, within here, study this level right here. Look at the 50% line of this 4-hour order block right here, the wick to the open. Look, it's allowed. Price is still bullish on the 1 minute. This is what I gotta keep an eye on. 10 a.m. open, low. Still clean highs right across here. Jagged edges down here. Price is going higher. Order flow is higher. Right? And then between here and here, this is what I should do. Target. Between this target and this higher time frame target, grade it. How is price reacting to the grades? That's good. A displacement through this level is good. That's a good sign. This is what I need to be doing when I'm watching order flow. Pull that fair value gap across like that. Study that. Not only that, on the 1 minute, put this into a 1 minute. Study how the grades is between the targets. Because the drawn liquidity is up here. Still, the 26 stop loss is down here. $26 is good risk management. That's good risk management. $26, $25, that's good. And I'm keying off of a 4-hour level. Study that. Study the breaker from here all the way to here. Or just the up candle. No need to be afraid. Why? Because 50% of this breaker, this is what I need to keep in my mind as I'm going through the trade. Look at the breaker. Boom. 50%. Nothing is past 50%. Right? Look at time. 10:30. Where's equal lows at? Well, there's some equal lows right across here, but we're not making it down here. Boom, and then we expand through here. Study this breaker right here. And we are midpoint of up here now. How is price reacting to here? And still here too. The drawn liquidity is up here, right here, and we're grading that move between there, that price range. Okay, coming down, but still that's nothing. That's not a big deal. Why? Because down, up, the entire up play right here, when this takes this out, you still got to study this. This is a breaker right here too. Study that. And even if you study this, look, Still no bodies down here on this breaker, so you're still good. Now you're above 50%, 1130, and you're watching it. Now I could be taking profit like here. Above this high, take some profit right here. Take some profit right across here. Pull the stop loss up. Probably right here. Confirm. And let it run. That's how I should have been watching it. Now, this is replay mode now, but I showed you the live trade that I actually took. I'm not going to do replay unless I show the live trade that I took. This is just a review for me, studying. Let's go. It's 11:30. This is 12. And we're from the level that we was at right here to here, we're still above 50%. So basically this, or even if you look at it from here, we're still above 50% of this range right here. All right, 75, 50 from down here. 12. 12:30. And what's happening here is engineering liquidity. All this is engineering liquidity. That's liquidity being engineered. But liquidity is still being engineered across here too. So it came down, it wicked that at, this is 1. It wicked this liquidity that built up right here, and then it took out the top. So that's how I should have managed that trade, right? That is how I should have managed that trade. And now we're going to go into some specifics down here, right? Let's go back to 9:30, and I'm going to show you what I was looking at, right? Option. Right here, let's look at this level right here, right? $9.22. Okay. So right here, right? I wanted to enter right around here. Why did I want to enter here? Because of this. right? If you look here, you're going to see this. See that? That and this. Once this happened, right here, I was ready to go. I put my entry right here. And if you look at it, right? Watch. Long. Stop. Even if I put my stop right here, I wouldn't have got hit right here. But put it at the low 4-hour level. Put it right here. Right? That stop. Use that. Right? Double click on this. Inputs. 21 pip stop. Right here. At the low of this 4-hour order block. Watch. Somewhere down here. Right? It's right here. So that was the stop placement. And the target up here or even here. Extend it to up here. Right? So this right here, this SMT is what I wanted to do. But not only that, there was a bigger SMT going on down here too, right? Watch this. Open, put this on a 15-minute, right? And we're going to study the SMT that formed, right? Look at this 930 low right here, right? Versus this, right? Right? There's already a SMT between here and here also, right? But right here, London, it came down into London. Right here was 215, 230 was right here, right? This is London low. I thought it was gonna run London low down here. What is this? 415 and 230 London low. This was London low here. So you see, this is where the SMT was at on the higher time frame. So that's why I shouldn't have waited. Why? Why wait? Because what? It ran London low. It ran London low on NQ. Boom. So there's a SMT here with London low. Right? Because NQ formed London low at 414, but ES formed London low at 230. Okay, so if I look at this at the 15-minute now, if I look at this play on the 15-minute, this is when the SMT happens. Watch. On the 15-minute, it forms the SMT here. It forms the SMT on the 15-minute right here. And then changing state of delivery happens right here. So once that change in state of delivery happens right here, that's when I wait for the retracement. So I could have played it like that too. Right here, right? And then what you do now, wait for the change in state of delivery, right? SMT, change in state of delivery right here. change right here. And then what I could do is this. Got to look back over here to see what's going on. This is it right here. This entire candle right here. The breaker. That's it. 15-minute breaker. Boom. All of this right here, and you're safe. This big change right here and all of this wick back down into here, and you take your trade down here. You got boom, boom, boom. All those chances to go up from here. All right, so that's it right now for this, and tomorrow I'm gonna just take my time with it, be very nimble. One trade a day, win or lose, doesn't matter. Today it was just one trade and I was proud. I just took one micro trade. That's it. All right, y'all. Thank you for tuning in. Peace.